Let's be so for real right now. Subject to is dead. Not just for Airbnb operators like me, but people who want to buy and flip or buy and hold. You will not be able to succeed with subject to, and there's three main reasons why, and some of these are new. This is a big deal. My name's Rakidzich. I've done Airbnb for 10 years, and I have thousands of students, some who have done subject to. And even though this seems on the surface like a safe way to get into real estate with less money, most of what you've heard online is an absolute lie. And what's more, mortgage companies are on the hunt right now. It's a terrible time to get caught doing subject to. I brought receipts. Let's jump in. Welcome back, Airbnb family. Let's expand on this very important topic of subject to. If you don't know what that is, quickly, subject to is where you buy a property, but the original seller keeps their mortgage. You assume the mortgage payments, and your ownership is subject to their mortgage. This means you do not get formal possession of the property until that mortgage is satisfied, because the owner cannot transfer ownership until it is. And you often make an off-the-books agreement, so that way both private parties know how this is supposed to go down. And on the more elegant deals, people will create a trust or a land trust and transfer ownership inside a trust, and the buyer will have power of attorney and be a beneficiary of that property. This sounds like a super smart way to do subject to, but this is actually the most illegal way to do subject to. It's immediately fraud, and I'm going to tell you why. But before we get into the argument of fraud, because that's controversial, it may be fraud, it may not be fraud. For a seller, it's very often not fraud, for example. There is one term that I think we can all agree on, and let's start there, which is the due on sale clause. Any lender has the right to pull a property and force the owner to pay the entire mortgage off with a due on sale clause if they so choose to for a breach of contract. Breach of contract will include transferring ownership to another entity. Whenever somebody sells an interest in their property in part or in whole, that can trigger the due on sale clause. Now, this may not be a big deal. Some mortgage companies may not have a due on sale clause, right? And even if they did, they may be okay with the subject to deal. They could allow this to happen in technicality. But here's the catch. Most modern mortgages absolutely have a due on sale clause, and they absolutely have a clause that says that you have to notify the lender if you're going to sell or transfer ownership in part or in whole to another party. And where we are today, the massive variable that has crushed subject to is the change of interest rates. The way that financial institutions work is they borrow money at a certain percentage and then they loan it out at another percentage. A mortgage is the same exact arbitrage play between percentage rates. A lot of mortgages will last for up to 30 years, which can mean that the mortgage companies are exposed to fluctuating interest rates if the Fed raises the rates, which they have. So many old mortgages were written at a 0% interest rate that now that interest rates are over 5%, correct me if I'm wrong there, that the money that they're making from that debt that is deployed cannot keep up with the cost of obtaining new money in which to loan out. I'll say that again. If they're collecting 3% here, but they've got to pay 5% over here, they're losing 2% on the dollar. It would be better for them to claw back old mortgages so that way they can get that cash back that they originally borrowed and lent out. So if they got that money back and cleared their debt, then they could write new mortgages at a higher percentage rate, and they can finally be profitable on the money that is now deployed. This was an oversimplification of how debt works. If you want to know more, I'll put a link down in the description so you can learn more about drag. Something that you may be seeing right now is mortgage companies are doing something called refi bait. Not only are they doing refi bait, but they're getting more aggressive than ever. They're doing outbound phone calls to mortgage holders trying to convince people to do cash out refis. And people are not taking the bait because the interest rates are such a huge difference that it's not worth taking the equity out of the home. Now, this is a perfect opportunity for subject to. Nobody wants to refi the homes, and nobody wants to sell and then be forced to do a 1031 exchange within a year while the interest rates are still high. So they'd like a sneaky way to sell the property and not claim that they've sold the property, so they can wait until interest rates come back down, and then they can do a 1031 exchange when it's safe. People are banking on interest rates coming back down, but subject to can get in and cause a transaction that keeps the mortgage, that 0% interest rate mortgage, in play. But it requires the lender not finding out. Because use your common sense. If a lender is allowed to revoke a mortgage because interest has been transferred, and lenders are actively outbound calling, spending good money to get out of their mortgages with refis, do you not think that a lender finding out that somebody is actively engaging in a subject to would be a perfect excuse for them to call the loan, to get that money back so they can take that $500,000 or $1 million at a time and then loan it out at a higher interest rate? The answer is absolutely yes. They are looking for excuses to take your mortgages back. Now more than ever, there might have been a time where lenders were lazy and would allow a sale to stay a sale. The cash is in play. But cash in play at a low interest right now is actively losing them money, and they are under pressure to solve that problem. And subject to gives them a golden parachute. So yes, all this does is increase the likelihood that a subject to deal is going to fail. That alone could be enough reason for you not to want to do subject to. But if you could hide the fact that the deal was exchanged, then you could still successfully subject to and the bank wouldn't be any wiser. And so many people in my comment section have said that they just generally don't like banks and they think that sticking it to the bank is ethical. That is aside the point, but you can let me know what you think about banks in the comments if you want to get it off your chest. But then herein lies the argument of fraud. A novice, somebody who has no clue what they're doing, who comes up with the idea of buying a property and the seller doesn't want to let go of their mortgage because they don't want to have to get a higher interest rate mortgage. If in some private conversation they said, here's a cool idea, why don't I just make your mortgage payments? In an innocent scenario, that would not be fraud. Because the buyer's not aware of how mortgages work yet because he's a novice and he doesn't know that the seller is obligated to declare that he sold the property. Now, the seller, initially buying the property for a different reason, did not buy the property to subject to. So if he happens to do a subject to later, he did not commit criminal fraud. He's only committed a civil violation that can call the mortgage due. Because in order for it to be criminal, he had to have the intention of defrauding the lender while executing the contract. This is the very small window in which subject to is not fraud. But because of YouTube, people like myself who teach for free, other creators that specifically teach subject to, there are people who now no longer have the argument that they're a novice. People who buy courses on subject to and full-time actively prospect for properties for subject to are what we would call sophisticated actors. And if a mortgage company or anyone else ever wanted to target one of these career buyers, they could make the claim that this person knows what they're doing and they're committing conspiracy to commit fraud by actively looking for sellers that are willing to do subject to. So the seller, in almost every imaginable scenario right now, is committing conspiracy to commit mortgage fraud. And that's reason number 2. You can do up to 30 years in jail for fraud. And if the seller is aware that he has to notify the lender, which he is aware, and he, under the advisement of the buyer, decides to forego telling the lender and actively attempts to conceal from the lender that he sold the property, like keeping insurances in the same name, keeping bills in the same name, transferring a property into a trust, or any other nominee structure, that is fraudulent concealment. And fraudulent concealment is mortgage fraud. This also depends on the state. So now not only is the buyer committing conspiracy to commit fraud and then fraudulent concealment, but then the seller also committed fraudulent concealment and fraud. And what's even crazier is that the influencers that you may be listening to about subject to right now are also implicated in the same fraud. If they teach their students that they can structure a deal to bypass a lender without the lender knowing that they made the purchase, so that way they can at scale buy multiple properties under subject to, the educator is committing conspiracy to commit mortgage fraud. And he's facilitating it at a large scale, and if there's international transactions where he's teaching people to do this, this could even be considered wire fraud. Anytime that you commit fraud where transactions go between states, like your bank is in Texas, you bought a property in Colorado, and you're making fraudulent mortgage payments, that could also be wire fraud. Every time you make a payment is a new count of wire fraud. But it doesn't end there. That was only 2 of the 3 reasons that you are in hella trouble if you try to commit subject to in 2025 or 2026. If you find this interesting, please like the video and share with your friends. I'd like to keep you out of jail. And number 3 is how everyone could absolutely go to jail. You guys may know that I teach Airbnb. People pay me $8,000 or $10,000, sometimes even $100,000 or more per student for me to help them build Airbnb businesses. Now, if I failed one of those students, or they just thought the opportunity wasn't right, but they were outside of their refund window and they got upset at me because they thought I was a bad coach or disingenuous, they could try to invoke a refund. And then if we disagreed on the terms of the refund and they got mad at me, they might decide to go to war. They might want to ruin my business. And even if you're a good coach, this is something you have to worry about. I have thousands of students, and we've given away a handful of refunds. And if any of those went south, somebody could actively try to destroy my business. They could put Yelp reviews or Google reviews and say this guy is a scammer and he's an evil dude. He or she could call my students to try to convince them to cancel. They could say bad things about me in my Facebook groups or on Reddit, all sorts of stuff. Now, I want you to imagine a course that you sign up for that everybody's talking about their deals, they're posting addresses, they're talking about landlords, and they all want to do subject to, which is essentially fraud. And a student gets scorned, somebody who's in the Facebook group who has access to all these addresses, and they get screwed over by a coach or a mentor or whoever, and they want to get even. They could go and find every single address they can find in every single group, every Discord, every WhatsApp, every chat, and they could go find the mortgage lenders for those addresses and whistleblow. A scorned student is the fastest way for the entire house of cards to come down. And it doesn't matter if there's only 5 or 10 counts of fraud per 1,000 properties bought in subject to. If any of those individual houses were purchased through a fraudulent manner, whoever facilitated the deal has committed fraud. And if they got advice from their mentor on how to get the deal done along the way, and there's a paper trail of texts or emails, that mentor will go to jail too. I highly recommend that while subject to is in an adversarial relationship with lenders right now, you stay the hell away. Because we see mortgage companies picking up active outbound campaigns to get out of these mortgages. And if they step that up and get investigative to start policing their mortgages to do calls on these loans, you could get caught in the crossfire. And this is not an ad to do Airbnb. Because subject to, if it was legal and safe, you could do it to do Airbnb too, and that would be totally fine. But you need to be safe. I do not want any of you guys going to jail because you saw some fancy ad on Instagram. There are plenty of ways to get a property with just as little money down. You could do a lease option to buy. You could sign a 3-year lease with a landlord. You give them a lease option premium of $5,000 or $8,000 up front along with your security deposit. You make your good faith payments for 3 years, and if after 3 years you want to continue to purchase the property, that $8,000 initially that you gave them, plus a little bit of principal from your 3 years of renting, would go towards the down payment of you buying that house. And many Airbnb operators do these versions of lease options to buy. They make sure that while they're paying the rent, the house actually makes the money that they think it's going to make. And somewhere along the way within 3 years, they say, you know what, this one cash flows really, really well. This one is worth owning. Let's buy it. And if the property doesn't do well on Airbnb, you decide not to renew your lease and you walk away. There are other ways to creative finance. And the lease option is a near neighbor to subject to. You could essentially do the same damn thing with the lease option. You have a little less safety, of course. You've got a little less recourse, but now you're not committing fraud because the owner of the property stays the owner of the property until the time that the interest can legally transfer, the mortgage can roll up, and a new form of debt can be put on the new deed of the property. If you do not believe anything that I've said in this video, go to ChatGPT and ask. I've done my homework because my students have a risk. And yes, there's a creator in the space that teaches subject to, and he's lying to people saying that Airbnb is banned in multiple states when Airbnb is banned in 0 states. And he's making these lies in order to try to sell people a program to get them to do subject to instead of Airbnb. And if an influencer wants to lie, it's time that we bring out the whole truth and stop protecting liars on the open web. I hope you're with me on that. I know that this video may not make friends, but let's just be for real. Thank you for watching this video all the way through to the end, and I'll see you on the other side.